Payroll management is the administration of the employee's pay with respect to looking at the type of employee. Is it a full-time employee or a part-time employee or a contract employee? Looking at whether that employee is entitled to a wage or a salary. Wage in terms of looking at weekly amount or piecemeal amount that will be given. While salary has to do with a fixed amount at the end of the month. Then considering the deductions in terms of personal deduction and statutory deduction that needs to be made from the salary and the disbursement of the salary to the employee. Administering employee salaries and the disbursement of the salary requires an handshake between HR and the finance department. The human resource department would do the work of preparing the salaries. Then they would pass that payroll to finance for disbursement of cash to the employee's bank accounts. And somewhere along the line, there would also be the part of disbursement of the statutory deduction. That is why there needs to be an handshake between HR and the finance department in the payroll administration process. Looking closely at payroll activities, it can be divided into three parts. One is the pre-payroll activity. Your pre-payroll activity has to do with, are there new joiners that need to be added to the payroll for the month? Are there exited employees that need to be taken out of the payroll period? Or are there time and attendance that we need to incorporate into the payroll? This would be much applicable in a manufacturing outfit where employees work on different shifts. That pre-payroll activity as well can form part of the overtime payment that will be part of the payroll calculation. Then going into the payroll activity itself, then we now start to look at all the data that is required for the payroll preparation has been collated. Then we can start to look at what is the pay breakdown, what are the statutory deductions that need to be done from the employee salary, and laying all of that down, whether via a manual process using Microsoft Excel or using a payroll system. Then the post-payroll activity. Now, the post-payroll activity is as critical as the initial two activities. The post-payroll activity has to do with, one, salaries are paid to the employees. What are the statutory deductions that needs to be remitted? All of those things go into your post-payroll activity. And in between all of this activity, there is a need for the handshake with internal audit. If you need to do a payroll audit, just to be sure that there are no variances within what you paid last month and this month. Very critical in order to be able to start to prepare payroll of employees in terms of the salary that would accrue to the employees. Critical to understand salary structure breakdown. By salary structure breakdown, we're talking about the basic component of the salary. Now, the basic component of a salary most of the time is broken into what we call the basic salary as well as the cash allowances. Now, the cash allowances there's no rule determining the cash allowances that organizations would have. But recognizing the fact that the more cash allowance you have does not have a direct reduction in the payee tax for that particular employee, as it were, because the Finance Act 2020 has made everything open to taxation. Now, talking about the types of cash allowances that you could typically have, we have your housing allowance, your transport allowance, your utility, your meal, your leave allowance, your 13th month or your Christmas bonus, and some organizations have a laundry list of allowances. Recognizing the fact that the lesser allowances you have, the less administrative burden you're going to have in the payroll administration. Now going a step further, looking at your salary, what salary will be paid to the employee is what we call your net pay. Your net pay, which is also known as your take-home pay for an employee, is calculated by deducting your statutory deduction and personal deduction from the gross pay. Talking about the statutory deductions, we are talking about your payee tax, your employee pension, your National Housing Fund, NHF, and some of the personal deductions that could be deducted from the employee's gross pay to get your net pay or your take-home pay. Is talking about union dues in the unionized environment, additional voluntary contribution, your loan repayment in situations where you've collected loan either from the bank or even talking about the staff cooperative as the case may be. All of this will form what we call your deductions, both statutory deductions and your personal deduction. Deducting it from your gross pay will result in your net pay. Now, speaking about statutory deductions, we have your payee tax, which is backed up by PETA 2011, as well as modification made by the Finance Act 2020. I did a detailed video on payroll statutory remittances. You can watch that by checking the card above this video. Now, each of these statutory remittances are expected to be deducted from the employee's salary before the net amount is paid to the employee's bank account. Then the most interesting part of payroll management and payroll administration is the payee tax. Now, payee tax is known as pay as you earn, payee. It's a type of withholding tax that is applied to every income of an employee. Now, how do we compute payee tax? This is the bone of contention many times payroll management comes up. Now, you need to start by getting what we call your taxable income. Now, your taxable income is equal to your gross income minus your tax relief. At every time that you need to find the payee tax that needs to be deducted from an employee's salary, you need to get what we call your taxable income. Gross income is defined by PETA and the Finance Act 2020. Then you deduct the tax relief from your gross income. Very, very critical. Then you now subject your taxable income to the tax table. Speaking about the tax table, the first 300,000 is taxed at 7%. The next 300,000 is at 11%. The next 500,000 is at 15%. Now, all of this may look very complicated, but we're going to get into Excel. I'm going to walk you through a simple payroll template that can help you to get your payee tax at a go. This particular payroll template is available for download in the video description below. Now, let's take a look at this payroll template. It's available for you to use. You can modify it as you will, depending on the salary breakdown for your organization. This particular sample template has all the following breakdown in terms of basic salary, housing allowance, transport allowance, meal, utility, and wardrobe allowance. You could have more than what I have. You could have a laundry list, but all of that does not make much difference as it were. Now, each of this is broken down and they add up to 100%. This breakdown is where the differences might come in depending on your organization to another organization. From here, you would impute the annual salary here and everything auto calculate. So if I change this, for example, to 7.5 million, can you see all of that has recalculated itself? Now, after getting the gross pay, you need to get your gross income. By virtue of the Finance Act 2020, your gross income is taking away all non-taxable income from your annual gross pay. Talking about your non-taxable, we're talking about your employee pension, we're talking about your NHF. Now, your employee pension is a function of 8% of your basic housing and transport. That's the example that was used here, and everything has been imputed into the calculation. Then your non-taxable that must be removed, deducted from your gross pay as well, for the sake of tax relief calculation, is your 2.5% of your basic salary. Now, that comes to a new gross income. Completely different from your gross pay. That's your gross pay is 7.5. In this scenario, after deducting your non-taxable to get your gross income, then we're having 7.014 million. Now, all of that will now be subjected to what we call your tax relief. So let me just highlight that here. These are your tax relief elements. All these are your tax relief elements. They are tax relief. All these elements are termed your tax relief element. 1% of your gross income plus 20% of your gross income, 1% of your gross income, or 200,000, whichever is higher. What that means is that we would do 1% of your gross income. Now there's a simple if statement doing all of that for us. That's the beauty of this particular payroll template. Just plug it in and you can be able to use it on the go. Now you could use it as an employee, you can use it as an HR professional, and you can even blow it up to create for the entire organization using the principles that are here. So when you do that, all of the formulas has been in there. Your fixed income is 1%. That's what you're seeing from the if statement. 1% or 200,000, whichever is higher. Then you have 20% of your gross income, which is 20% of your gross income, which we've noticed that the major difference here is that we are not using the 7.5 million as your gross pay, because by virtue of the Finance Act 2020, it has redefined what we know as your gross income. Then your NHF is also a tax relief. Then you now get what we call your total relief element, which is free. So out of the entire 7,014,000 thereabout, about 2 million is tax free. Then we will now get what we call your taxable income. What is that percentage or that part of your income, of the employee's income, that will be subjected to payee tax table? Then you discover that subtracting the 2 million from the 7 million, we have 5.4 million. That is what we call your taxable income. Then you will subject the taxable income to your tax table. Now, this is the beauty of what I was saying. We have written a nested if statement that would automatically calculate your annual tax deduction while applying the various elements of your tax table. You don't need to do anything. Just plug in using this template and your annual tax is done, automatically calculated for you. Then on a monthly basis, annual tax divided by 12 gives you what your monthly tax is going to look like. The employer pension is automatically calculated as well, dividing your employee pension that we've done on an annual basis divided by 12, as well as your NHF. You know what your total tax deduction look like. Then you know what your net pay or your monthly net pay looks like, or your take-home pay looks like. Knowing fully well this is where we started from. This is your 7.5 million divided by 12. That's your gross pay. Then you can see what I was saying earlier, that your net pay is when you subtract your statutory deduction from your gross pay. So you can see the gross pay is 625,000, while your net pay is 493,000. Before you go, remember to download this template, and I'll see you in the next episode.